Nike stock is down over 30% over the last year and is down over 4% after reporting Q4 earnings yesterday. We'll get into the numbers. We'll take a look at the financials. We'll take a look at this from a technical perspective, and we'll discuss if right now is a good buying opportunity for Nike or if better ones are in the cards in the future. What is going on, investors? Hopefully you guys are doing well out there. Out here in Malibu, California on vacation. That is why this video is coming to you a day late. But look, we got a chance to look at the conference call, look at the guidance, digest everything that we've got going on at Nike. And I think we've got a really interesting story playing out over at Nike. Again, last year, stocks down 30%. Over 5 years, though, stocks performed very nicely, up 98%. We have Q4 earnings and full year earnings that just came in. Revenue came in at $12.23 billion. That was essentially flat or just marginally down year over year, although it did beat expectations by about $140 million. We got some other news about a buyback, which Nike announced in the most recent quarter. Their share purchase was $1.1 billion. They've retired 8.5 million shares. This is on the heels of a $15 billion buyback that they approved in 2018, although on the conference call that they updated that they are going to allow a buyback of now $18 billion that replaces the $15 billion share buyback, which was set to terminate sometime in fiscal 2023. So they're going to continue to buy back shares. We also have on Nike a rising dividend, okay? They raised their dividend last year in November, which is about the time when they announced these types of things. So you still got a couple more months before they announce another dividend raise over at Nike. They raised it last year 10%, and this is pretty routine over at Nike. I tell you what, if absent of the dividend, absent of the accelerated share buyback, I tell you what, I probably would be in and out of a discretionary name like this, but I think you can hold this name considering you've got this dividend, considering you've got this buyback. You've got to put up with some rough years, okay? Over the last year, down 30%, year to date, down 35%. You've got to put up with that a little bit because as we run through these numbers, I'll talk about how this company is probably set for some near-term struggles. When we get over to the financials, we'll see this, but they had massive price targets. This came across this morning, so I'm kind of glad I waited till the morning to do this video, but we had price cuts across the board over at Nike. Deutsche Bank went from 152 down to 130. Again, the stock is about 105 at the current time. Bernstein went from 160 down to 140 on their price target. Jefferies went from 155 down from 160. BMO went from 142 down to 128. Cowen 127 from 133, and Wells Fargo down to 130 from $150 price target. Now, we got a little bit of clarity on the guidance on the call. We got a little bit of input from management, but what also is coming down is a lot of earnings estimates. Okay, I have revenue estimates coming in. Although when you look out into next year, essentially Q3 for Nike into next year, which is actually a February month, Wall Street's expecting this to reaccelerate into kind of a low teens grower. And so you have to ask yourself as an investor, is that going to happen? Is Nike going to be able to deliver on kind of a low single digit, maybe low double digit revenue growth? It's already come in a little bit. This is a question we're asking with a lot of companies. And then on the earnings front, I mean, Nike, this is essentially what we're looking at is quarterly estimates on these revisions. So these are analysts kind of revising. We saw their price targets come in. They're revising their price targets because they're looking at these earnings and they're starting to bring in, look at these earnings revisions just come in big time over the last month or so. And so we have to ask ourselves as investors, is Nike going to even meet this lowered bar? I think they're going to be able to do it on that earnings front, but this revenue accelerate in February of next year to a 13% revenue growth? Maybe, maybe not, quite frankly. We talked about the dividend over at Nike. Now let's take a look at these financials. The reason why I'm having a little bit of doubt in terms of Nike being able to reaccelerate these earnings is we're seeing a little bit of doubt when we get into these numbers. So we had our revenue that came in at $12.2 billion. Last year, you're at 12.3. Again, a small change down. Now for the full year, they're up about 5% on those revenues. But what's getting hurt over at Nike, and one of the reasons why you're seeing those revenue and more specifically those earnings estimates start to come in is look in the most recent quarter. Their gross profit went down by about 3% because our gross margins ticked down as well. Nike obviously manufactures a lot of their goods in China. They talked about on the conference call how they're trying to transfer that to different geographies, and that is putting a crimp on margins. For the full year, they had really nice revenue and really nice margins coming in at about 46%. Now, what's also increasing over at Nike is your demand creation expense. This is essentially marketing. This is all the TV ads. This is all the sponsorships of the leagues and the teams and the players. That is up 6%. But what it also is driving upwards over at Nike is the overhead expenses. This is all your employees, all your back-end office. That is up 8%. So when your revenues go down by 1%, when your gross profit is down by 3%, and your expenses are up essentially 8% across the board, that is going to be a problem for your operating income over at Nike, which ticked down 26% year over year on a quarterly basis from 1.8 down to 1.3. Folks, that is going to send your stock sliding downwards. You see for the full year, essentially flat on that income from operation. You flow down to net income and you get a 5% decline on that net income down to $1.4 billion. So you might talk about the dividend, okay? We talked about how that's one of the reasons why we're holding this company is for those dividend increases. You hold this for the long term. You get a dividend grower by your 6th, 7th, 10th year owning Nike, which certainly I'm in. Boy, your dividend yield on those original shares that you bought is really, really high. I'm probably earning 4 or 5% on Nike, but if you bought it today, you're getting a yield of just 1%. As this one continues to pull back, it gets a little bit more attractive from kind of a dividend growth perspective, but we're paying $1.22 per share. Some of you might be wondering, well, we're coming up on the November month when Nike typically announces kind of a dividend increase. Well, they're earning $3.56 per diluted share, so they got plenty of coverage on that dividend, whether or not they raise it 10% next year or maybe go a little south of that. I'm seeing some companies do a 5% raise. We'll see what Nike decides to do, but they've got plenty of coverage there. They've got some wiggle room there. Now, from a balance sheet perspective, we've seen cash leave the building a little bit on that cash side, but they've got these short-term investments essentially up a little bit. But what most investors are going to look at is the fact that you have inventories over at Nike up 23% year over year from 6.8 up to 8.4. I listened to the conference call. They said a lot of this inventory is, quote, in transit. So they've essentially ordered it from the country of origin and they're trying to get it here to the United States or wherever they're trying to sell these goods. That could potentially be a problem because if they have t-shirts and swim shorts on these boats, by the time they get here in the wintertime, well, nobody's going to want that. And maybe the styles and the seasons change on Nike and all of a sudden they're left with some inventory that they're going to have to heavily discount. I think that is going to heavily impact margins in the coming quarters. That's why we saw such steep earnings revisions over at Nike, especially over the last month. Analysts are just pulling in those earnings estimates. And I think a lot of it has to do with the fact that they have bloated inventory and they're probably going to get some goods in the coming weeks and months that are essentially going to be out of style and out of season. And guess what they're going to have to do? They're going to have to discount that and put it on sale. Everything else from the balance sheet from Nike's perspective looks pretty good. Long-term debt, it looks like it's down 5%, but most of that just rolled over to kind of the shorter term debt position. Obviously, we know with the way interest rates are going, in the past, Nike would just probably simply roll over their long-term debt into kind of a lower interest loan. I mean, companies have been doing this for like the past decade that we've been analyzing these companies. Well, they're not necessarily going to do that, okay? And in Nike's case, look, they have plenty of cash. $500 million is not a lot to Nike from a cash perspective, but when you're looking at your other companies, some of them might not be as healthy from a cash perspective, and as this long-term debt starts to roll over, well, they're either going to have to roll it over into a higher interest rate loans, which certainly will help bring down net income, okay? Because you come down here to Nike and you've got this interest expense, okay? This typically comes after your operating profits. Nike does things a little bit differently on their financials, but you see in the most recent quarter, they paid $40 million worth of interest expense in the most recent quarter. So this is significant, okay? As you have rates tick up, it will bring down earnings and certainly that net income, EPS, all those types of things, your price to earnings ratio. If these companies can't roll this over, they'll likely refinance at a higher rate. Again, not necessarily something that applies directly to Nike, but something to keep in mind as you work through this earnings season and you see these companies with heavy debt loads. Now, in terms of the different business units that Nike operates under, look at North America, down 5%. Europe, Middle East, and Africa up 9%. One of the few bright spots. China just absolutely decimated. And in some cases, I think investors are giving Nike a little bit of a pass. The fact that China, they noted on the conference call, I think like 40 to 60% of their operations in China were essentially shut down. That's on the manufacturing side, but also on the selling and e-commerce side as well over in China. Just decimated from the shutdowns over there. You see that business down 19%. So right now, that is a headwind, okay? Nike is going into China. They're having trouble making their goods there. They're obviously having trouble selling their goods when they're down 19% year over year on a sales basis, but that could eventually be a tailwind. You start to see China start to loosen up, the economy kind of get a little bit stronger over there. Well, Nike's a great way to kind of capture a little bit of that growth over in China. We have the APAC and Latin America regions. That was up strong. In fact, that's the strongest region, up 15%. Overall, when you look at the breadth of their brand, footwear basically flat year over year, equipment up marginally, apparel was down about 6%. There was some pull forward and people kind of lounging around at home, working from home. So they were buying sweatpants and sweatshirts and maybe some clothes to kind of lounge around in. Obviously, we'd expect maybe some weakness in there as people maybe have to get business suits and polo shirts again, as maybe they're going back to the office. They're not lounging around as much. Still strong over at Nike is this Nike Direct. This is obviously their e-commerce brand, up 15%. That should help maintain margins to a certain degree over at Nike. Now, all important earnings before interest and taxes, essentially your operating income in the different regions. I love how Nike breaks this out. You see here, North America down 18%. Look at Greater China, just absolutely decimated, down 55% in terms of their profits, from 691 million all the way down to 311 million. I tell you what, you do that for another couple quarters, all of a sudden you're losing money in China. I don't necessarily expect that to happen, but it just shows you the big impact on Nike. You are tied to China. If you don't like China, if you don't like exposure to China, Nike is not, I repeat, not a stock for you. China is a huge part of the Nike story, obviously from a manufacturing perspective, but quite frankly, a sales and earnings perspective. When China goes down, so will Nike. Now, we've seen it obviously with the stock price as well. This thing was up over $180 last year in November, and like a lot of stocks, it's just been on a ski slope downward. Now, it's sitting at about $105 per share. Would I step in and buy Nike at this area? Absolutely not. I see some areas down here, sideways consolidation. I do have some volume profile up here on the left-hand side. This is showing you where there should be some demand for Nike stock. Quite frankly, if the negative momentum in China in terms of the shutdown news and all those types of things, but also the overall market as well, I would expect Nike to continue to work its way down south of $100 per share. I think it's holding this 105 area just because it's a kind of a symbolic area of about $100 per share. I think it breaks through that level and it goes south of probably $90 per share. You've got some great opportunities here with Nike. South of $100 per share, you'll have dividend growth. You have that buyback as well. You've got solid track record of a success over at Nike, and I think that could translate over into the next couple of years. You got to get this at the right price, and I think anywhere south of about $90 per share, you could even bump it up to maybe about $95 per share. That would actually put you underneath the previous highs. I think a lot of stocks are going to do this. We had those highs before that March crash that we had in virtually all stocks. We're about to pierce through those at Nike, and I think that takes you south of about $95 per share. That's personally where I would look to buy shares of Nike. Hopefully you guys enjoyed today's video. We'll be back again more this week, and obviously as earnings season rolls along with lots of videos, hopefully you guys enjoy them. We'll be back in soon with more. Good luck with your investments.